morning, ladies and gentlemen. This is Edgar Rafondani, and today I'm going to be the narrator for our weekly analysis. Just to remind you guys, this is educational purpose video. It's not intended to provide you any sort of signal providing services. So any trade you're going to take is upon your own risk, and please be advised to trade with the right risk management. And then further ado, please switch off everything and please pay attention to our analysis. So for this week I'm going to try to be extremely short. And why? Because there isn't much interesting in our forex market these coming weeks because of holidays, and hence there's less volatility and less opportunity in the market. Remember guys, less volatility equals to less opportunities, because setups won't materialize in time, and even if you buy or sell, something's going to take a while to reach its final take profit or stop loss. Henceforth, we're just going to analyze market technically, and I won't be interested to trade anything based on fundamentals. Well, but just fundamentals still holds a huge bias to our trading. Example fundamentals that holds our bias is we are still positive on GBP because of the Brexit issues and the election. And for Donald Trump impeachment is still a very early stage issue in US, and how it affects the US dollar currency, it still hasn't materialized 100% in the currency. Hence, we're going to dive in with a lot of technicals and less of fundamentals for this coming week. Now, as always, we want to start analyzing the market with looking at the DXY. So, okay guys, I'm with someone here. I'm going to try my best to listen to his questions and try to encompass his question to our analysis here. So, his name is Mr. Anderson, and Mr. Anderson, the first thing when you do analysis, you want to make sure that you look at the DXY. DXY is dollar currency index, and I don't want to talk much about it. It's just simply an index that shows the value of the dollar, and for a very long time has been on a very good bullish uptrend. However, on the recent run, the last few weeks, starting shows a bit of weakness. But if you look here, the journey for this currency has been very bullish until around September. Now, 1st October here, you can see a bit of sell-off coming through on the dollar currency index. Now, this is where things get interesting for many traders, and for few traders make profit, for a lot of traders make loss, because there's high probability of reversal, and just because of the current uncertainties on the political wise, it kind of catalyzed to the whole aspect of where the currency might head next. If you look here, you could say this is the first reversal happening. You see the market, the price has broken through this support line, and now it's testing that support line, turning resistance around here, as you can see. And I'm trying to see if it will sell off all the way down, but I'm not so comfortable because of the strength of this bullish market. I want to see the price coming on this support line here and break. When it breaks here, that will be my final call on where the dollar is heading next. Okay, so that's where I'll be very confident. Okay, now this is a bearish reversal happening. If I may draw a line there, if that could also create an interesting outlook on where the dollar might go next. So yeah, if the price comes through this support line and breaks through, that'll be my trigger for sell. In terms of sell any dollar denominated currency pair. Otherwise, I'm still holding. We call it a negative to neutral bias on the dollar. So I'm bearish. At the same time, I'm neutral, so I'm not sure it's 50-50 probability. So how I'm going to trade this market? I'm going to trade this so how am I going to trade all currency pairs? most of the currency pairs I'll be trading them based on their own merit, meaning that if I'm going to trade Euro JPY, I'm going to trade Euro JPY just on how it looks, not on how it's being influenced by the dollar. So for Euro JPY, I had a call on selling Euro JPY, but because of the weakness on the dollar, you can see the Euro JPY just broken through. Also because of the weakness on the Japanese yen. So when the stock market performs extremely well, stock market, right? So you know understand what stock market is. When the stock market performs well, you have poor performance on bonds, and you have poor performance on JPY and gold, because all these three, we call them safe haven assets. Safe haven assets are instruments which have been traded by investors when there is economic uncertainty. So for instance, there's financial crisis coming up, most traders and investors will rush to buying those safe haven assets. The people start buying gold, people start buying Japanese yen. So these particular safe haven assets, they're very important in the financial markets because they have negative correlation to the overall economic performance. So since then, we can conclude that we have a very strong stock market. So JPY, the Japanese yen, is going to be extremely weak. It's going to perform really bad. Also, gold is going to be somehow weak as well. But I'm gonna get to gold later next, and I'm gonna explain to you why that won't be the case for the long term. And it's just because of in the long run, we see there's a huge economic uncertainty coming up because of the interest rates and political instability in the US. But so Euro JPY, how do I want to trade Euro JPY? Euro JPY has performed really good by trying to create a reversal. Now this is what a reversal looks like. You can see we had a very good downtrend. Now the price is breaking through, retested here. Now it's time to blow all the way up. So I want to see the price coming here, retest this area, and then I'm gonna buy from there. You get that? So that clearly start to form what's so called a reversal uptrend. So for me, that's very, very interesting opportunity to look for any buying opportunity for Euro JPY. And for good entry points, you want to go to 4 hours. So for 4 hours, there you can get some really interesting entry points. You can see here the prices. I see 1, 2, 3 kissing point. We just broken through that resistance area. This was a resistance area. The price came through back here. He's starting to test these areas. Now if the price tests these areas from this pullback and start going up, that's what we're going to look for buying opportunities. But all in all, I just want to see the price coming here, and there's a bit of confluence with this line here. This is quite good, interesting. So I'm going to mark this trade with a red color just to make sure that I'm following up for the coming week. Next trade will be USD CAD. I want to see, okay, USD CAD. It's also an interesting one. Remember, we have negative to neutral bias on the dollar, and USD CAD is highly influenced by the dollar plus oil. Remember, Canadian economy depends on oil. So any economy that depends on certain commodity is highly influenced by the performance of that commodity. Australia is highly influenced by iron ore. Iron ore means iron, steel. They are the biggest extractors of iron ore in the world. Canada, they're one of the biggest producers of oil. So these are commodity-driven economies. So you want to make sure that you be able to digest properly the commodity market plus the economy of these countries. Now for this matter here, you have USD CAD. It's extremely weak. Not extremely weak, but it's somehow showing weakness and in a consolidating manner. So when I say consolidation, what that means is you see the price is ranging on these areas here and it's not going anywhere. So the price kind of like forming this rectangle box. So this might signify or signal us a continuation pattern is happening or any reversal might happen. So for this matter here, there's high probability of the price to come to this support area here. As you can see, this was a previous support, this was a previous support. So on a 4 hours basis, you can see the price still following the trend It's broken through temporarily, but I do believe that the price will break through back here and start going all the way down here. So that provides us a really good risk, not a